I've worked with a lot of indicators over the years, more than I can remember, but very few have stayed with me the way moving averages have. They're simple, almost boring at a glance, the kind of tool beginners overlook because they think the market requires something more exotic, more complex, more impressive. But let me tell you something. Sometimes the simplest tools carry the loudest truth, and moving averages have whispered wisdom into my ear through bull markets, bear markets, panics, bubbles, and every kind of storm a trader can face. When I first encountered them, I didn't understand what I was looking at. A single line sliding across price like a shadow. No fireworks, no magic. Just a line smoothing out the chaos. Back then, I was too young and too stubborn to appreciate subtlety. I wanted indicators that screamed signals, arrows, alerts, lights flashing like a casino trying to pull me in. But the old guys on the trading floor, the ones whose eyes looked like they'd seen wars, they all kept a moving average on their charts. So one day I asked one of them, a man named Richard, who traded with the calmness of someone who'd survived a few too many market crashes, why he used them. He leaned back, grinned, and said, "Kid, that line shows you the truth after the market finishes lying to you. I didn't get it then, I do now. The market lies in noise, spikes, chops, fake-outs, candles that look like they were drawn by someone with trembling hands. But moving averages? They ignore the drama. They smooth the chaos. They show you the underlying heartbeat of price." Over time, I learned that the MA wasn't just a line, it was a rhythm, a pulse, a language. It told me when price was being dragged somewhere with conviction versus when it was flailing around with no direction. The first moving average I ever relied on was the 50-day. People today call it old-fashioned, slow, outdated. Let them talk. That line saved me during times when the market moved like a drunk man stumbling through a dark alley. I'd watch price dance around it, touch it, bounce, break, retest. The reactions around that line told me more than any indicator-packed chart ever could. I remember one trade early in my career where I used the 50-day without even realizing how important it was. The trend was strong, the pullbacks clean, and every time price tapped that line, it behaved like it had hit a trampoline. But then came the day when price sliced through it like it wasn't even there. Younger me panicked. Older me would have smiled. Because a moving average doesn't just tell you where to enter, it tells you when the party's over. Then came the 200-day moving average, the granddaddy of trend filters, the line that separates noise from disaster. When the 200-day breaks, even the bravest traders get quiet. I've seen entire funds shift their bias based on that one line. And I learned slowly, painfully, that when price stays below that 200-day long enough, the market is sending a message you can't afford to ignore. But the deeper lesson, the one I learned through years of scars and recovery, was that moving averages aren't meant to predict. They're meant to guide. They're not fortune tellers. They're thermometers. They measure the temperature of the market, not its future. The mistake most traders make is using moving averages as buy and sell signals instead of what they truly are: context, a compass, a way to understand the environment before stepping into it. As I grew older in the trading world, I started experimenting with shorter MAs, the 20, the 10, even the 8. Those were fast, sharp, reactive. They taught me how price behaved moment to moment, where momentum was building, where exhaustion was creeping in. The 20-day in particular became one of my quiet companions, especially in trends. A strong trend respects the 20 the way a river respects its banks, touching, pulling back, resuming. When that relationship breaks, it's rarely random. It's a sign the current is shifting. And moving averages together, that's where the story gets richer. Crossovers, alignment, stacking. When the 10 is above the 20 and the 20 above the 50, the river is flowing clean and strong. When they tangle and twist, the river is confused. And I've learned the hard way not to fish in confused waters. One moment I remember vividly took place during the COVID recovery rally. Price was ripping upward with ferocity, but the moving averages, especially the 50, were still turning slowly, reluctantly. That lag taught me something crucial. Moving averages respond to reality, not emotion. They don't chase hype. They don't fall for panic. They wait, and in that waiting is wisdom. Over decades of watching these lines glide across charts, I came to understand that moving averages are less about precision and more about understanding the character of price action. A rising MA tells you strength isn't a fluke. A flattening MA tells you something is shifting beneath the surface. A falling MA? That's the market leaning in to whisper, "Careful now." But the deepest lesson moving averages ever gave me didn't come from a chart. It came from the way they taught me to think. Slow when necessary. Steady when possible. Patient, always. They taught me to stop chasing every flicker of movement and start focusing on the rhythm beneath the noise. Because markets rise and fall, crashes hit, bubbles inflate, volatility explodes, but the truth underneath momentum, structure, direction always leaves traces. Moving averages help you see those traces before your emotions distract you. And after all these years, after all the indicators I've tested, all the tools I've abandoned, all the theories I've outgrown, I still keep moving averages on my charts, not out of habit, out of respect. Because they remind me that simplicity isn't weakness, it's clarity. And clarity, kid, is the one edge that never expires, the one friend that never panics, the one guide that keeps you steady when the rest of the world is shaking. And it took me years to finally understand that moving averages don't predict where price will go. They reveal where, and they reveal where the truth has been hiding beneath all the noise, the fear, the greed, the spikes, the fake-outs, the headlines, the chaos that blinds most traders long before they ever get a chance to see the market for what it really is. Because once you've watched moving averages long enough, really watch them, you start to understand that price is just the surface, but moving averages show you the current underneath the real direction, the intention of the market that isn't always visible in the candles themselves. And that understanding, kid, is where everything changes. I remember a session years ago, during one of those deceptively calm periods, when the market looks steady on the surface, but is coiling underneath like a predator ready to strike. Price was drifting sideways, lulling traders into boredom, making them chase tiny breakouts and micro moves. But the moving averages, they were flattening, tightening, bunching together like a cluster of wires about to spark. I'd seen that formation before. It's the market whispering, "A storm is coming." Younger traders ignored it. They were distracted by the tiny pumps and dips. But the MA alignment told a completely different story. Momentum was sleeping, building strength, waiting for something to ignite it. And when the breakout finally came, it wasn't subtle, it was violent. Swift. A clean explosion of price that left anyone trading blind, staring at the screen in disbelief. But I wasn't surprised. The moving averages had told me long beforehand. That's what they do. They speak early, softly, quietly, in ways you only understand after years of loss, years of charts, years of humility. But the moment you learn to listen, it's like seeing color in a world you thought was black and white. Over time, I learned something deeper about moving averages, something no textbook ever mentioned. They don't just measure trend, they measure trust. When price respects the 20-day over and over, it's telling you traders, trust the trend. When the 50-day becomes a floor or a ceiling, it's telling you institutions are stepping in. When the 200-day becomes a battleground, it's telling you the entire market is deciding whether hope or fear will rule the next chapter. That's why the 200-day carries so much weight. It's not magic, it's memory. It's where long-term belief gets tested. And if you've traded long enough, you learn that belief is the strongest force in the market. But here's where the real maturity kicked in for me. Moving averages don't just show you trend, they show you when you are fighting the trend. Every time I bought against a falling MA, I regretted it. Every time I shorted against a rising MA, I paid for it. Every time I tried to outsmart the averages, the market reminded me that intelligence isn't what wins alignment does. The MA taught me patience. They taught me timing. They taught me humility. But above all, they taught me this. Being early is the same as being wrong. The number of times an MA kept me from entering too soon is more than I can count. Without them, I would have tried to predict tops, bottoms, reversals, breakdowns, every trap the market sets for traders who think being right is more important than being aligned. Moving averages saved me from myself more times than any stop loss ever did. But the most powerful moment came years later when I realized that moving averages weren't just lines on my chart, they were lines in my life. They taught me how to operate, slow down when things get noisy, wait for clarity before making a move, follow momentum when it's clean, step aside when everything is tangled. Respect the long-term trend, even when short-term emotions flare up. Because, kid, if there's one thing markets and life share, it's this: direction matters more than speed. Moving averages are direction personified. And now, every time I look at them, whether it's the 10, 20, 50, or the old, wise 200, I'm reminded of the simplest and most important truth I've ever learned in trading. Moving averages don't exist to make you money. They exist to keep you from losing it. And if you stay in this game long enough, with enough scars to finally appreciate their quiet wisdom, you'll understand what took me decades to learn. Those lines don't tell you the future, they tell you the truth. And the truth is, the only thing in the market that will ever give you a fighting chance.